everybody, and welcome to the Dollar Auction Show. New year, new mustache, long time no speak. How are you doing, my dear friend Alex?
Shimon, welcome. I'm doing good. We haven't done these in about, a long time. 9 months or so. Happy New Year.
Happy New Year. How's the new year treating you so far?
It's been good. I think I even spent New Year's at your house celebrating with you. So I hope you remember me.
I do. My new year is going great, especially now that there's a small bit of news that dropped yesterday, um, which
Tell me
is
about this news, Shimon.
the US and the UK attacked the Houthis in Yemen.
Oh, different piece of news than I thought, but we could talk about that. Apparently, they only used zero point 0.2 or 20 bips, as they call it in the biz, percent of their air force to attack the Houthis in Yemen. So
Yeah,
20. Go ahead.
I'm saying beyond the Houthis in Yemen, which was a joke, they are a joke, and this was a joke too. But a Bitcoin ETF got approved, which is
Speaking of,
fantastic.
and speaking of 20 bips for the U.S. Air Force is what they use is what the most of the prices are for the new Bitcoin ETFs. How do you like that translation and transition, Shimon?
I really like it. I really like it. Both of us are fathers of two kids now, so we gotta up our. I gotta up my dad jokes. But with that being said, let's get serious, and I want to hear your take about what do you think are the main implications of this ETF, and then I will tell you what I think. Um, yeah, what do you think are the main implications for the
Most
industry?
people, it's a momentous day. I cried a little bit. I definitely had a celebratory cigar, let's say it. Let's call it a cigar. And I was excited. My main takeaway, outside of the typical takeaways, which we'll discuss in a second, is that being in crypto is an exciting ride. And we could talk to you about all the mess ups the SEC had and approving and the non approving. But in 2020, everyone in crypto became a macro expert from 2020 to 2021 because the macro economy essentially drives liquidity, drives the macro cycles, drives the business cycle, drives the Bitcoin cycle. Over the last week and a half, and especially last week and today, everyone's becoming an ETF expert. We're listening to Eric Balkunas and Jeff Seifert, I think that's how you pronounce his last name, on Twitter. And today, all of the crypto bros who are used to instant settlement and glassnode transparency are now delving into the world of TradFi ETFs, where there is T+1 cash settlement. So it's kind of interesting. We should talk about this. You basically on day one buy fake shares of an
Mhm.
ETF. They don't exist, and those shares aren't backed by Bitcoin, by the way. And those shares are hedged by essentially market makers who hedge it against Bitcoin futures ETFs and sometimes into the spot market, but not really. But some are OTC desks. So you have this T+1 settlement, sometimes T+2 settlement. But in order to get around that, the SEC allows people to do T-1 pre-buys of Bitcoin. Basically, it's a complete. It's like taking, uh, you know, it's like maybe the best example is there was the book before, and then Amazon came up with the Kindle, right? You have this e-reader, so they're like, Bitcoin is the e-reader to the manual book, which is gold. And they're like, how do we read this e-reader? I know. We'll buy 100 e-readers, and each e-reader will be basically one will be page one will be page two, one will be page three, and we'll read the e-reader, throw it away. Take the next e-reader, which is page two, read that page, throw it away. We take the next e-reader, which is page three, throw that away, instead of flipping through the e-reader screen. So instead of putting everything onto blockchains and having instant settlement and transparency, you have this like T-1 settlement, T+1 settlement, T+2 settlement. The cash has to settle across these ETFs. And it's like, on one hand, it's a gigantic momentous moment for the industry, which I'm sure we'll talk about. But I want to take a different angle of how it exposes completely how everybody's trying to see what the flows are, record flows or not, inflows, outflows. No one knows for days, and we're heading into a long 3-day weekend, which TradFi shuts down. Bitcoin is going to move, and we're going to see just a cluster of market displacement between the ETFs on Tuesday morning and this long weekend. Anyway, That's my take on this. I've been following this thing on Twitter, trying to educate myself and learn from experts, but it's just a complete exposure of how broken the traditional system is, where what we're used to is you see within a second on chain complete transparency of flows in and out without ever having to wait an hour, let alone 3 days or 6 days for the weekend to clear, for cash to clear across this whole system for us to get data. I don't know. What do you think?
No, I completely agree with you that it exposes the way in which Bitcoin is such a much more efficient money versus any other money, mainly because like weekends and stuff like that, but also because it's, in a sense, it's volatile, but it's much more predictable than other things that are maybe less volatile but less predictable. So this is something I think people don't understand. Like, I was reading Gary Gensler's notes, and he basically said, on the ETF, he calls it an ETP, but he basically says, though we're merit neutral, I'd note that the underlying assets in the metals ETPs have consumer and industrial uses, while in contrast, Bitcoin is primarily a speculative, volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. And so I just, like, first of all, you can literally swap Bitcoin for like $100 bills and it still works. Like, check this out. Like, $100 bills are primarily a speculative, volatile asset. Okay, that's not trivial that it's volatile, but it is volatile if you're trying to understand how much purchasing power your $100 bill will have a year from now. Like, we had lots of episodes during COVID, and I was correct that all the like spending will increase inflation, but like economists were completely not all on the same page. Some people said that there won't be inflation, other people said there will be inflation, and so now we saw the crazy inflation that happened, but you couldn't have predicted it before COVID. So in that sense, the dollar is volatile. And then when they say that $100 bill is also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. And I just take a huge personal insult when they talk about Bitcoin being used for terrorist financing, especially when Senator Warren spoke about Hamas, and my family was personally affected by Hamas. So, like, on October 7th, Hamas murdered my sister's ex-husband, so the father of her two kids, and they kidnapped his sister and her two kids. And the thing is, forget about how much Bitcoin they used, which is like, there was a Wall Street Journal article that claimed like 100 million, then they did chainalysis and they showed that it's a lot less. But even if it was 100 million, the US and Israel together were giving billions of dollars to Hamas, and it was all kind of voted in parliament. It was all above the table. So, like, I'm sorry, like, whatever you can use Bitcoin to do, you can use the $100 bill to do, except the $100 bill can be debased. Bitcoin cannot be debased. The $100 bill, you cannot trade it against other, commodities or currencies on weekends and nights. And Bitcoin can. And the most important thing is, what I love is that now that you have the ETF, it's basically a bridge between the two systems. So all the credit markets that exist for fiat, that don't exist for Bitcoin, now with the ETF, they can start existing. So I was just talking to a bunch of friends of mine that come from the credit markets in traditional finance. And they're like, yeah, it's ridiculous. Like, you have markets to borrow and lend shares of things, like repo markets and stuff like that, for everything except Bitcoin. Like, because again, it wasn't like completely integrated into the financial industry. So I think that's going to be amazing. Like, the efficiency of borrowing, of lending, of transacting, of holding, all of that stuff will just be arbitraged away, so consumers will benefit. And I think that's the major thing. And also, I have to say, it's pretty cool that the government capitulated on this, which means they just saw that the revenue potential is like really, really big. And so it's basically too good to pass. And so this reminded me of Saifedean Ammous's book, The Bitcoin Standard, where he says Bitcoin is like gunpowder. When somebody has gunpowder, everybody has to get gunpowder. Otherwise, the people who have gunpowder will just conquer the people that don't have gunpowder. So it's not optional in a way. It's like either you adopt it or you just like become irrelevant. And that's really exciting to me.
Yeah, look, I agree with you on most things. I disagree that it's about revenue. In this case, it was the DC Circuit Court that made a decision, and then their hands are tied. In this case, it's like a nod to the checks and balances we have in this country, and that it actually works. Um, uh, I do want to say a couple of things that the whole Hamas terrorist funding is just, I mean, Warren has been exposed, completely exposed. And I had, because of where I work now, I have a chance to meet with some of the government officials. And I met with one gentleman who has been older gentleman in his, call it 50s or 60s, to protect the innocent. 20 years of the CIA, worked a lot of the Middle East desks and Russia desks, actually. He's like a lot of Bitcoiners in the CIA, a lot of Bitcoiners in security apparatuses, and nothing that the Warren bill pretends to do, and better transparency, KYC, actually helps law enforcement. In fact, the U.S. law enforcement, Israeli, Western law enforcement, I think if we should actually try to get someone on here. It would be good to get someone to actually admit this. But they want people to use Bitcoin and cryptocurrencies because they can see what's happening on chain and trace wallet to wallet and understand the not only it's not just important to see I gave money to this Hamas wallet and then Hamas now has 100 million and what they can do with it. That's like catching a small fish. The big fish is finding out who all the donors are, and because they can give more and more and more, and stopping the source of funds. It's like, actually, the greatest example of this was World War II, when Churchill broke the German code and actually let, you know about this, so you could tell a couple of stories. I'll let you have this, I won't steal your thunder, but let battles be lost to not show that Project Bletchley, as it was called in World War II, actually broke the German war machine. Essentially, the code they were using to send all the messages across. You want to stop the major thing, and this is where, if you use blockchain, you can see where everyone's coming across. So Warren has been
Sorry, I
exposed,
don't
Gensler has been exposed.
Can you elaborate on the connection between the code breaking and Bitcoin? I'm not sure I.
I think U.S. law enforcement would rather people use Bitcoin than dollar, because dollars are opaque and you can't trace them. But Bitcoin and crypto, you can trace. In fact, Hamas in April of 23 came out and said, don't use Bitcoin because their people have been are being traced.
No, but I completely agree with you, but I'll say even one step further. I'm looking now, so the Director of National Intelligence, like literally go to dni.gov, and it says Hamas is a terrorist organization, right? Which means they're part of the OFAC list.
Yeah.
Do not wire money. Like if I would try to wire money to Hamas right now, right, I would go to jail. But then you have Business Insider here. I'm just saying it because like it's the first thing that came on Google, but there's tons of like similar pieces that says from December 11, 2023, Israel drove suitcases stuffed with cash into Gaza to keep Hamas in power. And so it basically says like, Israeli security forces would help escort millions in funds into Gaza, helping Hamas, New York Times reported. So they would literally like go to a bank in Israel, withdraw cash, put it in suitcases. They would have an army escort.
What's the point? I know we weren't going to go down this road, but why do this?
So they claimed that like we don't have money to pay our teachers, because basically Hamas is like both a terrorist organization, but also they run the government. So they also like run the schools and run the hospitals. And so what they said is, we don't have money. Something changed, I don't know, and suddenly they couldn't get the money that they were getting before. I think what happened is, and please don't quote me on this, I was actually in 2004. This was my job in the Israeli intelligence, but like everything I know is like completely irrelevant. But from what I understand, the Oslo Accords basically say that the ports of entry are Israeli. So Israel collects taxes for the Palestinian Authority, and then gives those taxes to the Palestinian Authority, and then they use it to run the government. And then when Hamas and the Palestinian Authority started basically a civil war between them in 2007, the Palestinian Authority said, okay, we're not going to transfer any more money to you. But then Hamas was like, okay, we need money to operate our schools and stuff. And so they had to like do roundabout things. And then something changed at some point, and it had to be actual cash
They
because
were
like
like,
they're OFAC sanctioned, so you can't just wire money to the Hamas bank account. But the crazy thing to me is like, okay, fine, like the US decided to give money to Iran, to give money to Hamas, so at least don't blame Bitcoin. Like, you decided to fund them, and you can argue whether it's good or bad, but just don't blame Bitcoin that, without it's almost like you read the articles and the subtext is that without Bitcoin, the massacre of October 7 wouldn't have happened.
of
And again,
course.
as someone who's personally affected by it, I'm very hurt by this narrative.
The disgusting part is that she's politicizing and essentially appropriating the hurt, like you said, of you and other people, actual pain for her political gains. Look, we've been working to expose her at the chamber, and it's just she's not a dumb woman. She's a very smart person. She knows what she's doing. She does it very, very well. And she went from she remember back in 2008, she was in Occupy Wall Street. She was protesting against all the big banks and all of traditional finance. And now she's became their complete lackey. And it's all for power. It's also she makes 300K a year, 285. She's worth 67 million. How do those things get married? There's only one way. You invest or you make huge money from speaking fees. And where are those speaking fees coming from? They're not coming from freaking nonprofits like us. They're coming from the banks. They're coming from others. Get Elizabeth Warren on there. It's all a very sad and cynical game. Many politicians out there are just doing it. There's so few that are doing it because they love the country, but many are doing it because it's just it's a grab for power. In fact, let's get back to Bitcoin, and we have other things to talk about. But I'll tell you one thing. One thing that I've been surprised by, and maybe I've been naive, but every single politician that I've met, small kind of level, state, local, city to federal, especially senators, every single one, extremely likable, extremely gregarious. You talk to them outside of politics and policy, he's like, man, I'd want to hang out with this person. I bet you if you and I right now, not knowing Warren or who she is, saw her without talking politics, they just sit down in the bar and go, whoa, what a smart woman, great conversations, let's get more beers there. She's great. That's their job. Their job is to be likable. They know how to manipulate emotions of people. They have very high emotional intelligence in order to be liked, to be elected. It's a popularity contest. And man, are all of them charismatic and charming. All of them. Very, very, very charming. And yeah, that took me by surprise. Actually, I thought those guys, the other side would be XYZ. There's no other side. They're all extremely charismatic.
Oh no, for sure. I mean, you wouldn't get elected, for Senate or for Congress if you wouldn't, be very
Yeah.
charismatic. But so cool. So like, let's be very concrete. What do you think the Bitcoin ETF means for the price of Bitcoin? Let's say by the end of 2024, because we need to make a price
Price
prediction.
predictions. Yeah, price predictions. Well, it dumped already, right? It's dumping now. It's all this settlement BS.
2024, not end of Friday, January
I
12th.
look. I'll tell you end of 2024. Personally, if I'm watching his day to day and I see, I want number to go up, right? And so number is going down. I'm a little bit like, but the longer it stays in this, if it stays in the 40,000-50,000 range for a while, it's actually kind of good because otherwise it was a little bit it was going up too fast, too quickly. And I wouldn't be surprised if before the end of 24, it goes down and retests the low 30s. I wouldn't be surprised. If you're listening, not financial advice, but I will be buying a lot with whatever money I have. If it goes down to the lower 30s, everything is going in. Everything. Um, I don't know. I think we'll hit all-time highs. I'm guessing somewhere 80 to 90 with the end of 24. What about you?
Yeah, my prediction is all-time highs before the election. I've been very constant. I actually spoke about this on DAS London, which was 2022 2022, or was it 2023? 2023 in March or so, and like everybody was really down because it was like toward the bottom of the market, and I was like, no guys, like the monetary policy will change before the election, and so we will see all-time highs on both stocks and Bitcoin. And it was funny because like everybody kind of jeered at me because it was like a panel with like VC type people that had all these like sophisticated theses, and I almost think, you know, that there's this the bell curve with like the stupid guy on one side and the genius on the other,
Yeah.
the one in the middle being wrong. So for example, there was like the 3 green 1 red for the stupid one, and 3 green 1 red. It's like 3 green yearly candles and 1 red has been the pattern for Bitcoin since forever. um, and then in the middle you have all the complicated technical analysis. So I was on this panel and I was like, guys, like, do you think that Biden will go into an election year with the monetary policy being restrictive? Absolutely not. Like, if I was Biden, I wouldn't do it, and I don't think it's good for the economy. But like, you know, especially if you buy. So my father-in-law, we've had him on the podcast here, Glenn Kirshner. He's very much in the camp of like, if Trump wins, it's the end of democracy. And so let's say Biden believes that, hey, let's keep democracy, let's pump the stock market. You know,
Yeah.
so it's very, very clear to me that that's going to happen. But beyond that, I think, first of all, I'm not really worried about the short term. I actually heard a podcast where people said all the big investment advisors that are the ones that are going to be allocating to this ETF, they were like, oh my God, we're so excited that this got approved. Let's fast track this. The call is scheduled for 3 weeks from now, because they just
Wait,
like,
wait.
they move slowly, you know.
Oh, I see. I
So
see what you mean.
people
Yeah.
think that the flows you see now mostly like from other products or from people that have it in self custody or people that have it in GBTC, like from a higher fee to a lower fee. But like, it's not necessarily new. Like, I don't see how new money was just like waiting on the sidelines, and on day 2 of this thing trading would just flood the market with new money. So that's why I'm not like really worried about the short term. But again, I'm just like very bullish about the link. So for example, credit markets, right? I'm very much aware because I work at Unchained, which is a company that basically allows businesses to borrow against their Bitcoin, and I just see the
Mm.
capital market for Bitcoin are very, very underdeveloped compared to capital markets in just normal assets, whether it's commodities, whether it's like index funds. All of that has been like active for many, many decades. And so, you know, like, they just had time to develop it. So like now basically people pay higher fees. I mean, just think of what it will do to lower the fees from like 1% on exchanges, or even, you know, to like 20 bips. It's pretty good for the demand, right?
I'm going to share my screen. I'm going to show a couple things here. So there was one tweet by Ellie Terrett, and she's a great box business producer who does a lot of crypto stuff. Let me just close this. And so she's, look at this tweet right here. So Larry Fink, BlackRock CEO, if you're fearful of your government or worrying government is devaluing the currency, then you could see this as a great potential long-term store of value like digital
Yeah.
gold. It's a ledger, but an institutional ledger that's cross-border. It's bigger than any government. Advent of the Bitcoin ETF as an example that we're legitimizing the asset. By the way, he also said that the Ethereum ETF is next, which is pretty spectacular. So I just want to show that because all the big boys are now talking about this, and all the big boys understand, and money is going to flow into it fairly quickly. But it's interesting you're saying so. 3 weeks from now is the fast track, right? To
For large investment advisors, like, yeah, for like that.
amazing.
Yeah, because they for example, they can't even change, even if they wanted to change like their investment strategy. There's like, when is the next time that the investment committee meets? You know, like, you can't just pull the trigger like one day after something got approved. So that's kind of a good thing. I wanted to ask you something else. So what do you think about just the state of the economy in 2024, given the fact that we're going into an election year. Do you think we'll see inflation? Do you think we'll see huge productivity increase? And just like, that those are the two things we like to talk about, which is the macro economy and the crypto economy. So what do you think of the normal macro?
It's hard to. I think this is the Kathy Woods view of the world, that we've had a rolling inflation. Excuse me, a rolling recession. And I don't know, I'm a little bit nervous that things are shaky. Things are very, very shaky. And they have to reduce rates soon. And the only reason the unemployment numbers aren't higher and the job numbers are as good as they are is because people are working 2 or 3 jobs to afford the things they used to be able to do on one job. So it's double
Wait,
counting the
I
job
don't
numbers.
understand that argument. Don't you have like a fixed number of hours? Like, how does the number
No,
of jobs
the
matter?
because they look at the ADP reports, and if I work at one company, another company, both are using payroll, it's like job
Counted
and job.
twice?
Yes, that's
That's
why
a
the
flawed
household survey.
methodology.
Why?
That's a
For
flawed
sure, but
methodology of,
there's two. There's payroll, because this never happened. This whole gig economy is fairly new.
yeah.
This never happened before. When the household surveys and job numbers are lower, when they do households, or how many, are you employed or not, it's different. So they're misleading, the job numbers. Unemployment numbers are also misleading because the workforce participation is low. So if it was higher, unemployment would actually, as a percentage, would be higher. And I don't know, I'm nervous. It's very shaky. Things just don't seem, I'm feeling this Wile E. Coyote moment. You're off the cliff and you don't realize that you're actually off the cliff. You feel like you're still running. And I do think we're going to hit a recession at some point, or maybe we have been, and just been like a really rolling one, so it hasn't been felt across the board. But I do think this is where Bitcoin decouples. People will really understand that this is an escape hatch. Although, look, Larry Fink, apparently I can show you another quote. Look, I actually, in this note, and I would love to get um, your perspective on it. Let me just pull up one more quote here if I can. Which I think I just killed it. But I'll try to pull it up. Here, give me your take, and I'll try to pull up that quote that I wanted to show you.
Well, I mean, my take is that, again, I agree with you. I don't know about recession. Like, I think the idea is more that, will the stock market keep going up? And I think yes, because I think, if here, I'll share my genius, sophisticated technical analysis model on the Nasdaq.
Yes,
This is
yes,
my technical analysis. Now, just look at it. Like, yeah, you have times of recession like 2008. You have times of opulence here, like after COVID. But like, at the end of the day, the shape of this line is just technological innovation. And like, I don't know. I was just listening to a guy who's like a analyst that's really bullish on Tesla, and he's trying to be even more bullish than Kathy Wood. And so he basically said, look, all these robots that they're working on, all these robo taxis, like, how do you put a price on that? Like, you can have a robot that cooks Mexican food for you that's operated from Mexico. And it's half operated by man and half operated by software. And like, the more the Mexican chefs, operate the robot, the less it needs them. And then it
yeah,
can have modes for different cuisines. Like, you can have Indian food, and then the robot is operated by India, and like Mexican food, and it's operated from Mexico. No, seriously. And then the robot just comes to you. You know how you order groceries from Amazon? So the groceries come with the robot. The robot like cooks for you, cleans up, and leaves. So like, how do you price that? Like, it's hugely deflationary. So again,
listen,
that's this, which is, or for example, with AI, what they said is like something like AI will become 10 times more efficient in 2024. And they had this like formula. They basically showed you can generate, the speed of the tokens can double, and the cost can go down by 5x. And so together it's like 10x of the cost speed ratio. How do you price that? And that's pretty much a slam dunk. It's just like, you don't have to believe anything. It's just a matter of just like continuously improving, OpenAI and all these guys. How do you price that? People are talking about Microsoft. If they integrate AI into Excel and Word and all of that, can they charge 30% more for the Office suite? If Zoom does that, if Google Docs
Okay.
does, so it's like it's really hard for me to like project the technological deflation. But I think it will be. I think basically we are growing. I mean, with this whole augmented reality, with the Apple Vision Pro coming out in March, like all of these things are like significant things are going to happen in technology in 2024.
It's gonna be a good year. Look, I don't know how to price it either, but Microsoft can definitely up to it. Let me throw one thing here. Maybe this goes to this is a friend, Charles Gasparino. He's Ellie's boss on Fox, and key quotes from the interview with Larry Fink and actually Bill Ackman. We should talk about the whole Bill Ackman crusade against higher education. But the economy is in a very good position and will get stronger, right? So this is the first thing that Fink says. And look, he's biased, but it is what it is nonetheless.
Yeah.
Again, on BTC spot ETFs, if you're fearful of your government or worrying the government is devaluing the currency, you can see this as a great potential long-term store of value. It's like digital gold. It's
It's
amazing.
actually amazing that ads for the Bitcoin ETF now are mentioning the government debasing money. And what's really cool about that is like you don't even have to be a doom and gloomer. Like, most people that are, for example, gold bugs, they're like, oh, the government's going to debase the money, everything's going to go to shit. We should buy gold to protect ourselves. With Bitcoin, you don't have to believe that things go to shit. You just need to say
Yeah.
Bitcoin will generate alpha on top of the stock market, just like it has been so far. And remember, Alex, you and I spoke at the end of 2020, and we said that Bitcoin will slowly integrate itself into all of the finance because companies will put it on their balance sheet. And
Yeah.
so, like at the end of the day, when you hold Nasdaq, when you hold S&P, you will have exposure to Bitcoin, but it will be like 50 years from now. So basically, you're front running everybody else. And what's really cool is like someone had this take of like, thank you, SEC, for not approving the ETF in 2015, which is when Gemini applied for it. Because imagine if they had approved it in 2015, the price would have run up much faster.
Yeah.
So people like us that didn't have money back in 2015 couldn't have front run Wall Street basically. So I'm thinking the same thing is happening in technology, which is like people just don't understand the magnitude of the changes that are coming. And so they're just being very cautious. And also like these government bonds now with the 5% that you can get 5% like risk free, people don't understand it's not risk free. The risk is that the inflation will eat into your like yield. The risk is not that you're not going to get your 5% nominal. And also the risk is that you get 5% on your bonds, but the NASDAQ does 12%. You know what I mean? That's a risk.
That's a
So
huge risk.
I don't think people are pricing it in.
So what are you doing with your funds, Shimon?
I haven't changed my allocation since we spoke. It's I think I don't remember the exact ratio, but something like 50% Bitcoin and 50% leverage Nasdaq and S&P, and I have a little bit of equity in my house, which I will take out as a home equity loan as soon as I can and just buy stocks with it.
You heard it here first. So when we talk about this kind of stuff, I don't know, a lot of other podcasts, I'm sure, talk, and I know influencers in the crypto space, they show their gains like plus 2,000%. It's like, oh, great. If you put $10 in, plus 2,000%, you can show the percentage all you want. But Shimon and I actually, we put our money whereabouts, quite literally, and good for you. So Shimon's leveraged Nasdaq. I'm like that. I don't know what I want exact percentages. I have all these charts and spreadsheets and looking at one thing or another, but I'm pretty heavily into in Bitcoin. I'm pretty, let's see, my overall I'm just curious. So my overall crypto allocation, oh boy, yeah, I'm like, listen, I'm like 70% crypto, 30% stocks, or
Oh
like
wow.
20% stocks, and like 5% maybe less cash. So
So I just
it's,
read the numbers. I'm like 0% cash and I'm 42% Bitcoin. and 58%.
Good for you. Good for you. You're a true believer. I salute you, sir. I salute you wholeheartedly.
Yeah, but what do you think about technology? Do you think it's overpriced? Like another thing, so we had at Unchained, we have this very cool product called Signature, which is basically our elite tier where you get access to the top thought leaders in the space. And so I had one of our events just for Signature customers with Tour de Meester, who's like I think one of the most brilliant analysts in the space. And I asked him this question that we brought up in the podcast like a year ago, which is like, okay, everybody says that stocks are overpriced at like a 30 PE ratio, which is price to earnings ratio, which basically means like if you buy a stock now, it'll take 30 years of like revenues for you to get back the price that you paid for the stock. And basically when that happens is like companies that don't create a lot of revenue, and you're basically counting on the fact that the revenues will increase in the future. The problem is that when that's the average PE ratio for the whole stock market, many people say it's overpriced. We have never seen, those levels of PE. But I was like questioning that, and we had an episode here in the podcast that questioned it because like technology has a higher PE ratio than not. And so the more technology eats more and more traditional, industries, the overall PE ratio of the stock market can keep going up, and that's still sustainable. And I posed this question to him, and he said, no, it's not sustainable because you cannot generate enough cash to justify those things. And I guess you can either generate the cash, or what you can do is like generate the deflation of like what this cash can buy you. So, if you can buy more and more things with the same cash because of technology, that could also justify a high PE ratio. So like I just don't know. I don't know who's right, but I think people have always underestimated technology. Always. Like every time we had a new technology, people said, it's only for rich people. It's not going to really, disrupt the traditional economy and so forth. And time again, they're proven wrong.
Uh,
But what do you think?
yeah, I don't know. It's the first time I'm kind of thinking about your thesis of technology is going to permeate more real world, and the PE ratios are going to get higher. I don't know. I don't have a good perspective, but my initial reaction is to say that's not quite right, because I think technology in and of itself just signals some new innovation, and what currently has low PE ratios were yesteryear's new innovation. At some point, we consider as like electricity, utilities, low PE ratio. But when electricity first came, it was huge boom,
Exactly.
right? That was probably a huge PE. So I think PE ratios also kind of sunset and go down into some sort of
Or
terminal PE
given
ratio.
technology, but what if you have more and more new technologies entering the stack of the stock market? And like as
Yes.
one of them flattens out, you have another one, you know.
Yeah, so that's why you have to be technology forward. Actually, our thesis at some point, Nasdaq right now is tech forward, but if Nasdaq is just a marketplace. If the Nasdaq's composition changes, we would actually theoretically shouldn't be long Nasdaq. We should be 2x leverage Kathy Woods, ARK and Best. That's the real deal. That's all tip of the spear, new technologies. Some hit hard, right? It's like a VC fund.
Yeah, well,
More risk.
yeah, I don't know about like basically Kathy Wood is just a subset of the Nasdaq, and I'm just not good at picking stocks,
Yeah.
so I just don't want to pick the subset. But check this out. I'll share my screen here. You can see these are historical PE ratios for the S&P 500, and
Yeah.
this is from 1871. So you see the range is like from like call it 9 or even less, like you have your 5, and
Yeah.
high end here in the just before just after the when the earnings collapsed. But like
When is this? What year is this? This 2008.
yeah, this is like 2010, so it's right after the crash. What happened is that the earnings crashed, but I don't know why, but
It's
basically
a technicality.
this is clearly an anomaly. But if you look at the band here, you can see that we're on the high end, but like you could suggest that there's an overall trend line, although it's very noisy. but you could suggest that there's a trend line of it going up. Like just
No,
like if I'm
I don't
eyeballing,
know. I
no,
mean, to me, it looks like a trend line starts. No, but look, actually,
you eyeball the part here after like call it 97 when the internet started. On average here, it's much higher than before 97, before the internet. So
I
that's
would.
what it meant was like new technology. Like now, if we get self-driving cars and robots, it can be another wave like the one that started here. I have no way of proving this, but this is how I would just, if I had to justify the P's, that's how I would do it.
I don't know. This feels noisy to me. If anything, after 1975, it looks like it's going up. So I don't know if it's the basement or what is it, right? But this is where it looks like it's going to creep up and stay in that second top half. But look, I think we should do an analysis on this. It's way too noisy. It feels like bottom half and then top half of the range. But
Yeah, I mean,
who knows?
listeners can listen. We had an episode from a year ago where I analyzed it in a much more. I created the chart myself, and it was very clear that basically it was within a range, and then we broke out of the range
Yeah.
in function of technology. Again, I'm not a technical analyst. I don't know. I'm just like buying and holding indexes, like both Nasdaq and S&P. But that's my advice. And I just think you want to be invested in something that gives you upside. I don't believe in bonds because bonds basically have a capped upside. And I just think if you cap your upside, somebody else is buying it from you. And so I'd rather have the upside than not have the upside. So that's why I'm not in bonds.
Why don't we tackle in depth next time? There's a lot of things that are happening, and we want to make these episodes. We want to come back and do more of these. But we should tackle the whole PU again, revisiting Shimon's analysis from the Industrial Revolution analysis, which is a brilliant analysis that you had before. You
Yeah,
had a
like
stepwise analysis of PE.
there was the Industrial Revolution. Then afterwards, there was the telephone revolution, like telegraph, and then telephone, and then internet and computers, and airplanes. So like you always get the next thing. That's the thing. We're now focusing on AI, but like the car had a huge impact. The Ford Model T, the computer, even before the internet, had this thing. Oh, another thing that I just wanted to leave our listeners with: if people complain that bad people are using the technology, it basically means it's a good technology, because the first people to use cell phones, which were pagers, were drug dealers. The first people to use computers mostly used it. Sorry, I don't know if computers, but the internet definitely mostly for porn, because people don't want to go to the store and be embarrassed, paying
Yeah.
for. So it's like the fact that bad people are using something absolutely doesn't mean anything about the economic productivity of that
Yeah,
thing.
that's
I'll
true.
just
If you think about it, just from pure capitalist incentives, if you're a crook, your job is to find the best ROI for the best technology out there to help you commit whatever crime you can commit, because the risk is so high. So you don't, without regard for the law, you're trying to find the most optimal technology to help you do what you want to do.
Yeah, you're saying you have more incentives to
Completely.
like be a little bit more efficient than someone who's just like doing normal stuff.
Exactly.
Yeah, it's a good point.
Exactly. Your incentives are disproportionately high to get the marginal iota of efficiency versus
Mhm.
someone else.
Well, guys, this is not investment advice, and most importantly, it's not advice to do crime or to consume
Yes.
pornography. Very important.
Don't be bad. Stay
You can
glad.
use
Don't be bad.
pornography, but don't consume pornography. That's the motto. Anyway, any last
I,
closing thoughts, Alex?
no, that was a pretty great closing thought there. Produce, don't consume pornography. Chef's kiss from the Dollar Auction Show.
And with that, our dear listeners, we're excited to be back. We're happy to to be able to do this again. So please send us topics that you would like to hear about. And with that,
We're
uh,
back, baby.
we're back, just like the Bitcoin ETF. It has been rejected so many times, and now it's back with a vengeance. Have a
Until
great
later, Shimon.